Time for Crypto Market Update, February 2nd, 2026. As always, I try to make this a safe place for down-to-earth guidance, commentary on the market. So if you like this video, give me a number 5 in the comments and share this with a crypto-curious friend. Oh, and hang in there. It's going to be a long one. Going to throw a lot of info at you. Settle in, bookmark this, make sure you watch it in the next hour or so. Now, following a weekend of massive sell-off from Binance central exchanges across the world and some deleveraging activity, we have a huge macro signal to the bull side, which is the PMI, the Purchase Manager Index, coming in above 50, marking for the first time in several years economic expansion, which is probably the reason why gold, silver, look like meme coins over the last couple of days, selling off over 40% in a day because the safe haven status or that sizzle's wearing off in light of the PMI expansion. I want to direct you to the weekly Bitcoin chart because that is the April 2025 low. This is this weekend's low, Sunday, February 1st. Now, if you'll notice, this price is $80 higher than this price, meaning structurally, that price never broke bull market structure. And if you zoom in on the daily chart now, on the most recent price action, you see that we had the selling climax over here on this Wyckoff accumulation schematic number 1. We had the automatic reaction, and then we had the spring event potentially. If this green daily candle that we're in at the time of me recording this video, if that finalizes at or above where we are, this is what we call a hammer candle pattern. These hammer candlesticks are notorious for being bullish reversal candlestick patterns that form at the conclusion of a downtrend. Could also end up as a bullish engulfing pattern, we'll see. But if you put 2 and 2 together, the Wyckoff schematic number 1 and the hammer candlestick patterns or the bullish engulfing patterns, this would make a lot of sense, especially if we truly never broke, and we didn't on a technical structural level, the bull market structure. There's also one of the largest CME gaps due to the weekend manipulation dump that we've ever seen in Bitcoin history, right up there in the 84,000 realm. Now, it usually takes about a week or so for these CME gaps to fill, so bookmark this and let's come back to it. And despite the sell-off in Ethereum and other cryptos, BMNR, the world's largest digital asset trust led by Tom Lee of Fundstrat, just purchased this morning at market open 42,000 Ethereum worth $97 million. And they're sitting on $1 billion in cash. So if you hear the fear, uncertainty, and doubt rumors that they're going to go bankrupt, far from it. Now, I want to share with you my rapid fire investment thesis moving forward in this market. But before I do, I want to ask you a question. Go back in time 6 months ago, 12 months ago, 2 years ago. Go back to when you first started investing in crypto. Do you feel like you know more now than you did then? You probably do, but that probably came at a price. You probably feel like a crash test dummy for your portfolio. That has everything to do with strategy or lack thereof. Maybe you're looking for a strategy because you didn't have one when you started, or maybe you're looking for a community to invest alongside of that shares your core values and worldview. I think one of the most dangerous things you can do is invest alone. Maybe you just want to build wealth with crypto more predictably, with crypto literacy skills and market cycle knowledge. If that sounds like you, try out the crypto flywheel method. Go to cryptoyall.com, explains everything there. You can even watch my 12-minute overview video on how we use the primary market, the world of DeFi, to create cash flow, appreciation, and leverage on demand. There's no better time than these inflection points in the market to make sure you're ready for the next leg. And also, the goal is to equip you so that you never have to play the guessing game in all of these crypto cycles, which, by the way, repeat over and over and over again for the rest of our lives. So if you're a business owner, a mom, a dad, a retiree, a pre-retiree, maybe you just want to make the world a better place and you're trying to use your resources for that, or you're just trying to pad the stats for the future, check out cryptoyall.com and schedule a one-on-one video call with me. But you have to watch that video first because that'll explain how you actually do that. Once you and I work on a strategy together, we'll see if it's a good fit to move forward. Now, in light of this awesome economic metric that we received this morning in the PMI, which we've already covered, let's talk about our investment thesis moving forward. We covered that we did not break the bull market support in terms of price that was set on April 7th, 2025. We actually stayed $80 above it. Now, my understanding of the market, maybe you live in a fairy world where this doesn't take place, but the world that I live in, the market loves to inflict maximum pain. And max pain, well, it's a two-way street. Yes, max pain is when they drop prices, but max pain can also be when prices get uncontrollably upward. So my base case is that Bitcoin has a chance for a new all-time high, and that's the contrarian trade at this point because nobody believes it's possible. But there's nothing structurally here that says it can't do it. It's these things that get you called a heretic or get vegetables thrown at you in public. But nobody ever got wealthy following the herd. One crazy thing to think about is that Ethereum has actually never experienced expansion since the last bull cycle. It's just ranged. It's in this extended flat, this accumulation phase. Literally any price people buy Ethereum for between 1,000 and 3,000 are incredible accumulation points for the next 3 to 5 years. We throw around the words bull market and bear market, but the reality is that the market's becoming more sophisticated and every asset or every chart that you look at is technically starting to develop its own cycles, its own hermetic patterns of time. And the last 4 months for Bitcoin has been red, and that's only happened twice in history of Bitcoin. Now, back to metals. The huge, and I do mean huge, risk-on signal is starting to appear with copper and gold. Just look at this volume profile. What you see is the capital rotation we expect from gold and silver to the sigma, not the beta, but the sigma to gold, which is copper. Now, if you're waiting on all of that precious metal money to go straight into Bitcoin and crypto, it doesn't happen that fast. Yes, you can see money rotate from one crypto to another pretty quickly, or one crypto narrative to another, like a meme coin to a meme coin within hours. But when it comes to multiple trillions of dollars of precious metal market cap being taken off the market, that doesn't just flow directly into Bitcoin. It takes a bit. Now, couple the PMI with now Truflation reporting a less than 1% CPI. That's obviously the inflation billboard metric that everyone looks at all of the time, including the Federal Reserve. Now, what does this tell us? Well, if PMI is going up, that means the economy is hot, and we're going to run it hot because the White House wants to do that. And CPI is so defeated, inflation is so much not a factor that's going to tell the market, hey, we've got some room to run. And while on low time frames, central exchange manipulation can play a big factor on price action, on high times or mid time frames, this stuff matters way more. And so far today, the Dow Jones has put over 500 points on the board, and the S&P 500, NASDAQ, and Russell 2000 are challenging all-time highs once again. So my base case is that we have this massive leg up only to be answered by the true bear market, deep and very harmful, but abbreviated, and then stimulus, and then expansion. It's going to be a wild rodeo ride, and I'm here for it, and I hope you come along with me. Go to cryptoyall.com while seats are available.